Are you struggling with your January tax bill because of the dreaded payment on accounts? Well, one thing a lot of people don't realize is that you can actually reduce your payment on account and in some cases even reduce it down to zero. So what are payment on accounts? Payment on accounts are advanced payments towards next year's tax bill. They mainly apply to self-employed and to landlords. They are based on this year's tax figures. You normally make the first payment on account on the 31st of January, and then you pay the second payment on account on the 31st of July. And each one is usually 50% of your previous year's tax bill. Now, the problem is how HMRC calculates this. HMRC automatically assumes that your profits next year will be the same as this year's. But in real life, that's often not the case. Your turnover could be down, your cost could be higher, and you might even be making a loss. And that's where the option to reduce them come in. If your profits are lower, you can apply to reduce your payment on accounts accordingly, even down to nil if appropriate. At this point in time, we're more than 3/4 into the new year. At this point in time, we're more than 3/4 through the year. So by now, you should have a fairly good idea of how your year is shaping up to be. Has your income gone up? Has your cost increased? Are profits lower than last year? Based on that, you should know whether next year's bill is likely to be higher, lower, or roughly the same. If you know it's going to be lower, you make a claim through your self-assessment returns to reduce the payment on accounts. So what you're effectively telling HMRC is this: my profits are lower than last year, therefore my tax bill will be lower, and therefore these advance payments are too high. But there's always a but, and you need to be sensible. If you reduce your payment on accounts, and then when you submit next year's tax returns, it turns out your tax bill is the same or higher, HMRC can charge you interest on the underpaid amount. There's no penalty for making a genuine and reasonable estimate. For example, you might expect a quieter year, then land a big contract right at the end, and that happens. But deliberately reducing it without any basis can cause problems. So don't just accept the figures your tax software gives you. Review your numbers, look at how the year has actually gone, and get advice if you need it. And then reduce your payment on accounts properly and not blindly. Hope that helps. If you found this useful, give it a like, follow the page, and share with someone who's stressing about their January tax bill right now. Take care. See you soon.